Hey guys, PB here, and in this video we're going to go over how swing trading works and what I believe is one of the best swing trading strategies that I personally use. I mean, a lot of my profits are from swing trading, and that's because I don't swing trade often, but when I do, it's because I have an A+ setup. And without further ado, let's get straight into it. You guys know how I do it: straight value, straight to the point, no BS. I call all that stuff out. I'm basically going over why swing trading works really well. How do you know if swing trading is going to be for you? And then the swing trading simple strategy that I use. I mean, I probably have about a 90% win rate with this strategy, and when it works, it rips. And it's very, very simple. You guys know my strategy is very simple. So I've been teaching you guys my day trading strategy, and I'm going to continue to, but this is my swing trading setup. So this is for people that, can't watch the charts for every second, or they have full-time jobs, or they're in school. That's what swing trading is for. It's for these multi-day setups where you can buy one day and, hold it for a day, hold it overnight, hold it for a few days. This is for those people. So if that's for you, or you want to just get more into swing trading because, maybe what's happening to you is you're seeing the move, you're seeing what's happening, but you're not able to catch the full move because you're sissying out. That's what swing trading's for. So guys, the reason swing trading works really, really well for some people, in my opinion, is because of 4 reasons. Number 1, you don't have to look at the charts every second. You can really kind of relax, take a step back, look at your trade, and obviously you're taking farther out contracts or even shares, so you're not gonna be down 20% in a few minutes. No, it's very, very hard to get to that point, and you really have time to let your trade develop, because what happens is, I'm sure some of you guys happen to you, where you enter a trade, then you're early on it or something like that, and that's the worst feeling. So swing trading, what it's really, really gonna help you do is, if you're good at technical analysis and you feel like you're always early on the trades, or you always miss your entry, then swing trading's for you, because you're taking farther out contracts, so you can hold it a lot longer, and you can actually let your trade play out instead of getting stopped out after a freaking 5 minutes. So that's why I really, really like swing trading. Number 2, it's multi-day setups. These are not 5-minute trades. No, these are daily time frame trades, not even 5-minute time frame trades. And then number 3, it's really, really great for growing an account if you have good technical analysis, because with swing trading, if you really know how to trade them, and what I'm going to teach you guys, and you can catch those full moves, dude, the gains are freaking insane. You're obviously taking less trades because a swing trading setup is harder to find than a day trading setup, but when you find it, they're very, very high quality, and you can make a lot on them. And then last but not least, some people just like swing trading better, because the biggest thing I see is because people are good at technical analysis. But again, this is back to the first 2 points. It's if you're good at technical analysis, but you're always early in your trades, then swing trading is going to be for you. But I could talk my butt off all day long about swing trading. Let me show you guys how to swing trade, the swing trading strategy, and maybe let's see if it's for you or not. So as you can see, I'm sharing my screen here, and when we're swing trading, you're looking for one of 2 things. Number 1, a post-earnings setup. So you're looking for a stock that's gapped down or gapped up off of earnings, because the whole swing trading strategy is off of the gap. It's all off of the gap. So as you can see right here, this is our gap, and the gap is the most important thing. So it's either usually post earning setups, or it could be some sort of gap up or gap down due to news, or maybe just a random gap up. I don't know, but gap ups or gap downs, you're trading the gap on these swings. So the first thing you want to do is, once you find one of these stocks with a gap down or gap up, so here we have Meta. We had a big gap down. I think it was off of earnings. So it's the first thing you do is you mark the top of the gap candle, the low of the gap candle, and then where the gap ends. So now we know this is all our gap area right here. Okay, that's all our gap area right there. So what do these levels mean? So typically, guys, the top of the gap candle and the bottom of the gap candle, so these 2 right here, this is going to create a pretty big range for you. So expect some chop in between these levels, okay? But once you break out, then you can get a freaking insane rip. It's a big break of structure, and it's in a gap. And obviously it needs to break out in the gap, guys. So it's a lot more A+ if it breaks out in the gap, because there's a lot higher chance your trade wins if it's in the gap fill. So what happens here? We mark the top, we mark the bottom, boom, daily close over. This is when you want to buy calls on this daily close over, and you're swinging them. If we go back under the 446 level, then you can get out. But this is what you want to look for, is this this break of structure candle, you buy calls here, you swing them. Just like on this trade right here, you caught probably 300-400% in your options contracts. So let's review it again. What do? We see a gap down. We identify a stock with a gap down. It had earnings. We gap down. We mark the top. We mark the bottom. We want to see a little bit of range, which we see, you know, this chop, 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 and then the candle, the zone, trade it. Boom. All right. And when you're trading these setups, guys, so this is obviously the same setup. But another thing I want to go over is when you're trading these setups, you could also day trade them if you don't want to swing trade them. So like these levels are going to work the same exact way in the 5-minute, just as key levels. So as we can see here, this 5-minute chart, we got a 5-minute close over, a retest, and an intraday rip. So like it's the same exact thing. You're just trading it with a lower time frame. But let's review another setup. This is one that I really want to go over because of how many times it tested the level and how you can know when it's going to break. So guys, you can see Netflix, top marked, bottom marked. Obviously, this doesn't matter because we're waiting for it to fill the gap. We need the gap, so upside. And what happens? We test it 1 time, 2 times. Third time we break. But how could you have known that the third time you're going to break? The rule of threes, guys. The rule of threes is literally a money glitch in the stock market. And the rule of three is basically like, if you test the level 3 times, if it doesn't break the third time, there's a very high chance it's not going to break out. So guys, when you're trading, the third test is a test you want to look for that breakout. And that's usually when it's going to break out. For example, so 1, 2, this is the time it's going to break out most likely. And if it doesn't, then you can expect something to go down. So, or it's either that or boom. So like the third time is very, very important, guys. Very, very important. And what happens? 1, 2, 3. You get a daily close over. You want to buy some calls and look at this rip. Look at this rip. You get a daily into this gap. We freaking rip. Another example, we got IWM. We had a gap up. So we marked the bottom, we marked the top, right? What happens? We come back down, right? We come back down, same exact level. We mark the top, we mark the bottom. So what are we looking for? Is we're looking for, since now we went under it, there's like another gap to be filled. So guys, like let's imagine this is the level, right? This is the gap candle. You want to mark the bottom and you want to mark the top, right? If we go like, so we have 2 candles back to back like this, right? If we then go under it, right? You want to mark this level, okay? And you want to mark the top. And what do you think is going to happen if we go like this? I tell you one thing, the stock market moves level to level. So what's going to happen is we're just going to go straight back up to the top of this range, which is what happens. So we get this close over and then we go to the top, but this is the best trade. So we have the gap fill right here. We have the top mark, daily close over and a retest. This is where you want to buy calls. This is where you want to buy calls. You swing them all the way up to your target at 215 since that's the gap level. And it's as simple as that. It's as simple as that. Here's another example. We have Amazon. We have the gap candle. We want to mark the top. We want to mark the bottom. This is the bottom of the gap. Ba, 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 ba. This is the gap level. This is your target. What happens? We get the range that we want to see. Resistance here, daily close over. This is your entry on this retest or on this close over. You swing calls. They filled the gap perfectly to the penny, to the freaking penny. Like it doesn't get more simple than this, guys. I mean, again, you want to look for a gap down. So say boom, and then this is the gap, right? Now this is your gap area. You want to see some sort of range, blah, blah, blah. And once we get a close like this, you can expect it to go all the way to this level. Ba, 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 ba. The stock market moves level to level and gap fills fill 9 out of 10 times. That's why we have that 90% statistic, is because these gaps literally fill that amount of the times. So it's like we know, we literally know. And the stock market moves level to level. But someone may ask, PB, what type of contracts are you typically trading on these? So these are usually anywhere from overnight setups to 2 to 3 days. So typically I like to trade either the next week contracts or 3 weeks out. So I'll take slightly out the money calls. So for example, on IWM, say right here at 211, I wanted to buy calls. I would take not this Friday's, but next Friday calls. So 2 weeks out, about 14 days out. And I would take probably 213s, 214 so that I can get in the money and catch that big value pump. But guys, that's really it. That is how we swing trade. So let's get a recap. Let's get a recap, guys. I want you guys to do in your head. What do? We have a gap down. We want to mark end of the gap, the top of the gap candle, the bottom of the gap candle. We want to see some range. then we know this is a big level. So guys, it's the same as like a break of structure. This is literally a break of structure. We're trading the trend to the gap fill. And just so you guys know, 9 out of 10 gaps fill. So once we get into that gap, we have a 90% chance of it winning. So we will take some calls right here since this is a first close over the gap, and you always want to wait for that daily close. If you don't get that daily close, so you're taking these trades typically towards the last hour of the day because that's when you're going to know if it's going to close over or not. And then your stop's going to be a daily close under the level. But typically, like, you're just going to, you're going to obviously take some trims in the gap ups, take some trims, but I mean, that's really it. That's it. You mark the top, mark the bottom. Once you get that daily close right here, I would take 2 weeks out. So what day was it? May 3rd. I would have taken around May 20th, maybe May 21st calls, probably like 455 calls. So I could have gotten the money. And look, we got $20 in the money. You would have made hundreds of percents. It's as simple as that, guys. It's as simple as that. So guys, that's swing trading for you. If you think that, you can't actively day trade in the market, you have a full-time job, no worries. There's swing trading, there's day trading. And if you like day trading, stick to day trading. Do what works for you. But I do both of them. And I day trade obviously a lot more. But when I see those A+ swing trade setups, I hit them hard. And this year, I've only lost one swing trade. And I've probably taken about like 8 of them. And I've lost one. So that tells you something. That's just the ones that I alerted. I've taken a few more too and won out of them. But when I see those A+ swing trading setups, I love to take them. And obviously day trading's the beauty, but swing trading's also another thing good to have in your arsenal. Now you know what to day trade and swing trade. Again, guys, I hope you guys enjoyed this video. Drop a comment if you need anything, and I really hope that you guys learn from these videos. I try and simplify everything for you guys. I try and get straight to the point. I don't want to bother you with all the stupid things that don't matter. I'm getting straight to the point, and yeah, that's really it. If you're interested in getting mentored by me, learning everything how to trade in 3 weeks, click the link below, apply to be mentored. I have an exclusive mentorship program. I'll teach you everything in 3 weeks, and then every single Sunday for a year plus, we'll hop on a call, see how you're doing with your trading journey, etc., etc. We don't have many spots open. Apply below. And if you don't want that, no worries. I have a free Discord. I drop tons of education on my Instagram, my Twitter. Just shoot me a follow, join the free Discord, and subscribe to me on YouTube because lots of more videos coming. Also, I like to answer all the questions in my comments, so leave some questions, and I really hope you guys enjoy. My motto is, I make the difficult simple. I make the difficult simple through my unique way of sharing education and knowledge, and if I could do it at 17 years old, then you could too. That's a wrap, guys. So, editor, that's it.